back again today with, of course, my favorite guest, Brandon. How are you, my friend?
I'm doing well. You should probably stop saying that, though, LaDonna, because you might not get more guests on.
I'll never stop saying it. I'll never stop saying it because it'll never not be true.
I mean,
Thank you
everybody's
again.
our favorite, right?
Well, of course, of course. I mean, I'm a fan of everyone in this
There you
industry.
go.
However, you are my favorite guest. I'm not
Well, thank
backing
you.
down. You're welcome. So I wanted to have you back because we've received so much and just people reaching out, thanking us for our previous interview and loving the information that you were saying. So I wanted to invite you back
Well,
so
thank
that
you.
we could dive into it a little bit more because we had really just started to scratch the surface of it. So let's jump back in. If you haven't watched it already, go back, watch our previous interview to really pick up where we're picking up from today. But let's jump on in. So we had left off on servicers and how servicers really are targeting their current customer base
Yeah.
that maybe was gifted to them. Can we say gifted? Because that's how it feels.
Yeah.
Gifted to them by LOs who originated those loans, turn it over to the servicer, and then the servicer starts really marketing that customer base, thereby removing it from the LO who brought it to them.
Right.
What are your thoughts on that?
Well,
What's your stance?
I have too many thoughts, LaDonna. That's why the minimal time part of this will continue to do more and more segments, I guarantee it. Is we were talking about opportunities in the current market because as loan officers, that's what we want to talk about every day is where can I find more opportunities to grow my business? And you're absolutely right. Servicers or MSRs, mortgage servicing rights, whatever you want to call them, are heavily valued based on their ability to retain and recapture business, especially in this market. And we threw some numbers out in our last conversation. And in fact, since then, Rocket Mortgage came out because they were in the news this week because they purchased the rights to service a REIT, a big investment fund. And they published that their recapture rate is now up above 85%. So 85% of all the loans that they have on their books, they are recapturing if that client pays off their mortgage or refinances it. So all that to say, as a loan officer, where can we find opportunity? And I'm going to bring up a quote from one of my favorites. He's not my favorite because I was a fan of his team. He's my favorite because of what he accomplished in his role as the head coach of the Alabama football team, Nick Saban. And a guy that wrote a book about him, Andy Andrews, interviewed him and asked him what his secret, or at least one of his secret keys to his success was. And his response has stuck with me. He said, well, Andy, what I try and do is figure out how to compete when my competition doesn't even know that there's a game going on. And that's pretty deep. There's a lot
I
to
love
that
that.
statement, right? And what I take that to mean as a loan officer is, while everybody is out there in the market right now talking about interest rates being lower because the Fed cut the Fed funds rate, which in reality isn't completely accurate, that's the game that they're engaged in, right? Rates are lower today because of the Fed funds rate being slashed. You should look at doing a rate term refinance and maybe save a couple $100 on your monthly payment. And that's an opportunity, but everybody is competing in that space. Preying on what Nick Saban said, let's find a way to compete in a space where there isn't a game going on or there's less competition. You've probably heard the term, LaDonna, there's riches in the niches, right? Like this isn't really a niche or a niche product, but talking with clients and having high-level conversations with them around managing their debt is where I see a lot of opportunity in the fourth quarter of 2024 and moving into next year. Now, a couple of quick numbers for you before we run out of time. ICE published a study a month and a half ago or so, maybe 2 months now, about tappable equity available to borrowers in the United States. Tappable equity is just equity that homeowners have access to while still maintaining a 20% equity cushion in their property. And the numbers were staggering. Close to $17 trillion of total equity is available in the market. 11.5 trillion of those dollars are tappable. What does that really translate to? Well, that translates to 3 out of every 5 homeowners in the United States of America right now have access to at least $100,000 in tappable equity. Now, to bring this full circle, okay? Do we have time to go full circle,
No, of
LaDonna?
course. Take it
Okay.
to the max for me.
Full circle is, where is the opportunity in this? Well, while everybody else is calling borrowers, servicers in call centers, loan officers in call centers are just dialing for dollars and calling borrowers and trying to get them locked in on a rate term refinance. That's a solution. It's not what I would say is the best solution for borrowers in the current economic climate that we find ourselves in, where food prices have increased, gas prices have increased, credit card interest rates are up. Borrowers hold more debt on revolving lines of credit today than ever in the history of the country. Borrowers need help, and we have tools available to help them. I was talking to my brother yesterday, and he works at an investment advisory firm, and somehow their mission statement came up, and he shared it with me, and I'll read it to you. This is what it says. Their mission statement is to create, build, and manage wealth so their clients are free to pursue life's most important endeavors. And I thought that was cool. I thought, that's great for an investment advisory firm, but how about as a loan officer? I can actually accomplish the exact same thing. How many of you listening to this, and how many of you know people that need a little bit of help right now? They need a few extra dollars in their bank account every month. And you can help them accomplish that by having high-level conversations with them that the loan officers and the call centers and the order takers aren't going to be able to effectively have, to create life-changing scenarios and solutions for your borrowers that will put them in a better financial place. And there's less people competing in that space. Everyone's over on the rate term side when you could be on the debt management side or the cash flow improvement side, whatever you want to call it, that's actually going to not only impact and improve their mortgage scenario, their mortgage situation, but also improve their entire financial picture if done properly and executed correctly.
What a beautiful perspective and a great reminder of this really is why so many of us want to work within the mortgage and real estate
Yeah,
space, because you get to have these generational effects if poised correctly to change people's lives and to change future generations'
for sure.
lives. This is why, again, I will maintain that you are my favorite guest. I did maybe a minute of talking and you could just take it from there, and yet you answered everything that I could have wanted for you to answer. So, as always, thank you. Thank you for being here with me today. I cannot wait to bring this up and to chat more about it with you again.